All right, good morning, everyone. It is 9:10 in the morning of July 21st, 2022, and this is my pre-market strategy session. So, the title of the video today is It's Still Bearish. And now, the reason that I say that is because the economic, what do I say, slowdown, is forecast to go into the beginning of 2023 and even perhaps a little bit past the first quarter of 2023. So I suppose as of right now, most of the time, if you leave the market alone, really, if under normal circumstances, there's, no sort of recession forecasts or so on and so on. The S&P, the tech sector, the Dow, they all tend to perform well, outside of any other sort of economic force like the Fed or GDP, or war, so on and so on and so on. The market just tends to do well. And so right now, you can see here, there hasn't been in the past, let's see, since the middle of June here, the market is attempting to do what the market does, which is generally go up. So this could be a bottoming pattern. I doubt it. I think that there's still too much in front of us as far as earnings season goes, and then we've got a GDP reading coming out toward the end of the month. So right now, this is really just quite possibly a bear market rally, and you can't, the technicals here, it's interesting. Here on the Qs, you can see it came up and it closed that gap and really took off to the upside after it closed this gap right here. And so, generally speaking, it's better to be bullish than bearish. Certainly in a historical context, there's no doubt about that. It's just from day to day as a trader, it really does help to have your finger in the wind and really knowing exactly which direction things are going to go that day or at a given time period in the day. The morning times are a lot more active than the afternoon sessions. There's a lot more volume in the morning sessions. And so, yeah, it's, let's see, let me look at here we go. Yeah, so you can see here, the morning session volume right here dies off, hits around lunchtime, and picks up a little bit, and then after lunchtime and into the afternoon, it's not until close to the close, within about 20 to 30 minutes of the close, that there's any volume. Volume is just really, really light after the first, hour and a half. And so you can see, this is quite common for summertime markets. You can see the vast majority of the move is made in the morning. And the morning time folks are buying into the close. The last 30 of the minutes of the day was generally selling. So I think that's probably going to be the predominant pattern here until the end of the month. So I'll look for an opening pivot. There's a little bit of an opening pivot here on the 10-minute. Not quite. Let's look at the 5-minute. Let's see what the 5-minute gives us as far as pivots go. No, nothing. No real pretty pivots. Let's see. Let's see what the 1-minute. I usually don't pay attention to 1-minute pivots. It's just too short of a time frame. Sometimes a 5-minute pivot I'll pay attention to. Yeah, there's nothing there. No 1 minute. 1 minute pivots aren't really worth paying much attention to anyway. 10-minute really is the only one that's starting to show pivots. So okay, Yeah, my bias, it's my bias in the past couple days really hasn't served me well. I've been bearish in the last couple of days, and it really, I haven't gotten many bearish setups really within the first hour or so of the day, and I've been taking off and I haven't been trading the afternoon session at all. So, I think I'm just gonna kind of play it as it comes again. So right now, the market looks like it's moving out of overbought and into attempting to go into oversold. So there might be some selling at the open, and so but it'll be fast, So yeah, I'll probably take advantage of some selling at the open until it gets into oversold conditions, and then I'll take profits. But I won't know exactly until everything opens up, really. See the VIX. The VIX risk range. Yeah, so the VIX is really close to the bottom of the end of its risk range. It looks like it's about to start really letting go. We'll see, though. The VIX is starting out the day heading toward overbought, which you can't buy and sell the VIX of itself, but you can use the indicators to time a trade. And so it's coming out of oversold here. So strengthening VIX on the 10-minute here, strengthening VIX may indicate a little bit of a sell-off at the open. But then it probably won't last long. And this is on light volume too, these VIX signals, so they're not really trustworthy. I'll probably wait until after the first 20 minutes of the day is over, see how things come back and look at the RSIs on the VIX and the Qs and see what I want to do. And we've got Bitcoin here. I've got this resistance line here on Bitcoin, and it's looking like it's getting close to the line there, to the resistance line. I'd love to see it break through and go higher and continue higher for a sustained period of time. But the economic conditions that we're in, really put us at a point where you want to stay away from the risk assets. And whether you think Bitcoin is going to be around for the next 100 years or not, it's a matter of really the price action is the measure of risk. That's your volatility. And so when things are this volatile and economic conditions turn down, the risk assets get sold off. People want to shelter and protect their portfolios from risk, and crypto in general is just as risky as it can get. I mean, almost. I mean, I guess you go to the casino, I think the casino would probably be more risky than Bitcoin and cryptocurrencies. I happen to like them, but that's because I mine them. I mine Bitcoin and XMR Monero, and so for me, the cost of mining is less than the revenue that it generates. So I'm okay. I kind of like it. I hope it does really well, but I don't have much skin in the game. So, all right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.